Welcome, everybody. Welcome to our first analyst call of the year. We're going to let everybody join, and then we're going to get started. Welcome, welcome. Let's wait for another minute or so. Let's be patient. Welcome, everyone. Let's wait for another minute. How are you today, Alistair?
Very good, and you?
Very good. Very well as well.
Very excited.
As you can see, guys, we have a special guest today. We're going to make the introductions. Don't worry. Be patient. Welcome, welcome. Cool. Well, let's get started. So as you guys know, my name is Eliza Dinga. I'm the Director of Research at 21Shares. Today, I'm very excited because we have our very own head of capital markets, Alistair. Alistair is also French. He is part of the capital market team. He actually built the capital market team from scratch. Maybe Alistair can give us an introduction about yourself.
Sure, with pleasure. Thank you, Eli, for the introduction. Very happy to be here. So I'm Alistair. I'm heading up capital market for 21Share. I joined the company in August 2021, and previously I was working on a traditional ETF capital market desk for 5 years in London. I'm here to build the network for 21Share.
And you've been around crypto as well for maybe quite some time, right? 5 years now?
Yeah, almost 6 years now. So I started in 2017, before the real bull market at that time. Was an exciting ride.
Very exciting, very exciting. I'm very excited to have you today. Thank you so much for making the time. So as usual, we're going to have a market update, a quick market update, because today is going to be a special analyst call where I'm going to give insights into the ETP structure by interviewing Alistair, so that we can shed more light into the differences between crypto exchanges and the ETP structure. I'm sure some of you are very clear about this, but many investors still have question marks, so we're very excited about this. And then thirdly, and of course, lastly, we're going to have a Q&A sessions where you can ask any questions about the ETP structure, but also about what you see on the market. So let's get started, because it's quite an interesting environment, as we've seen over the past 30 days or so, especially in the aftermath of the FTX collapse. What we've seen is that the dominance of Bitcoin has increased significantly, close to 40% from the global market cap of the crypto asset industry. It's been a driven rally. And interestingly, it has been led by Bitcoin and not Ethereum and other crypto assets, which is really fascinating. And then the other side of things is the fact that the traded volume, especially for Bitcoin, has been significantly larger compared to Ethereum. As you can see here on the left side, $32 billion were traded for Bitcoin, any pairs like Bitcoin, USDC, Bitcoin, and Tether, etc. And while for Ethereum, we've seen about $8 billion. And interestingly, there is another pattern that we also spotted at 21Shares, which is the fact that the 200-day moving average for Bitcoin has been surpassed by the current price. And the last time it happened in the last bear market, it was around May 2019. And that was in the aftermath where Bitcoin was traded around $3,000 for about 3 months. And after that, Bitcoin increased by almost 200%. So of course, if the market replicates the same pattern, and of course, past performance is not indicative of future results, we could see Bitcoin to really new highs, close to $30,000 or to $35,000 per Bitcoin. But again, the macro environment where we are right now compared to 2019 is completely different. At that time, we were in a tech boom. At that time, we didn't have the risk of a recession, given the fact that, of course, today, many banks, like for example, the Bank of America is predicting that the recession may not be the case in Europe, which is great news. The Fed may turn and pivot as well by the end of Q2. We have yet to see, but these are really important patterns to keep an eye on. So if Bitcoin still is above 19.5K per Bitcoin, it would basically be a pattern to keep an eye on, very similar to 2019. And then interestingly, we've seen that institutions have been investing slowly. Here you can see the OTC holdings of all the desks that were identified on the blockchain. And interestingly, there is about 5,000 Bitcoins held by OTC desks, which is around basically more than $100,000. And that's the highest in since 2022. So since July last year. And bear in mind that last year, the valuation were reset, right? We've seen the lowest valuation ever for many tech stocks, but also for Bitcoin and Ethereum for, let's say, the past 4 to 5 years. So interestingly, what we've seen here is that the environment is completely different from July 2022. Clearly, the market is pricing in the collapse of FTX, potentially the debacle between Genesis and Gemini. So this is great news. And also at that time, to give you a historical context, the price of Bitcoin, especially the performance, in Q2 last year was the worst ever that Bitcoin has experienced over the past 13 years. So that's very important here because basically it was a performance just for a quarter of about minus 57%. And we haven't seen that ever. So it's going to be very interesting to see how it's going to pan out going forward. But so far, the year-to-date performance of Bitcoin is pretty good, close to 30% so far. And then at 21Shares, we like to look not just at the prices and what we see on the blockchain from the institutional perspective. We're also looking at the fundamentals. And the best way to understand the fundamentals is to monitor the developer adoption. So there has been a report published yesterday by a venture capital firm called Electric Capital, looking at the developer traction across many ecosystems. And definitely the fundamentals are stronger than ever, especially compared to the last bear market. Ethereum is 5 times as big as 2018. Ethereum is still the largest ecosystem in the world with more than 5,000 monthly active developers, which is really impressive. Bitcoin as well, even though Bitcoin does not have as many comprehensive smart contracts as Ethereum, well, the developer community of Bitcoin is still one of the top across all the ecosystems, including Solana, including Polygon, including Polkadot, etc. So Bitcoin is 3 times as big as what we've seen in the last bear markets, which basically shows that the innovators, the entrepreneurs, and the developers keep building despite the price drawdowns. And that's a very important metric to keep an eye on because always price is a lagging indicator of fundamentals. And usually when the fundamentals get closer to the price, that's when we're going to see very interesting valuations. And again, last but not least, many investors are asking us whether Solana is dead. Well, Solana is one of the most rapidly growing ecosystems as well. Despite what we've seen in the aftermath of the FTX collapse, Solana is absolutely not impacted anymore by the FTX debacle. The Alameda hedge fund and FTX had about 10% of the Solana circulating supply. But interestingly, we are seeing that Solana is trying to decouple itself and grow in and of itself without FTX and Alameda. So these are really great metrics to keep an eye on as investors, and also to, of course, keep an eye on what we have coming up soon for any research reports, including our upcoming magazine that we're going to publish next week, so stay tuned. And then on the back of the fundamentals, again, we've seen the highest number of new developers ever in the history of the crypto industry last year, with a total of 61,000 developers, which is very, very impressive, despite the fact that we had a bull market over the past 2 to 3 years, especially in 2021, which was the highest number of developer growth. Definitely 2022 was also remarkable, despite the bear market. So this is really great news, which shows again that we're going to see fantastic applications going forward. And some of these entrepreneurs are planting the seeds for the next cycle. And then last but not least, for the ETP inflows, maybe Alistair can give us more insights on what we've seen over the past month or so, especially when it comes to the single assets.
Sure, with pleasure. So last month and so year to date right now, flows in the European ETP market have been mainly driven by Ethereum and Bitcoin. Those are the asset class that have been, really collecting trade here. So you can see it's above 4 million for Ethereum ETP in Europe, slightly less for Bitcoin. And it's followed also by Solana. You were mentioning, is Solana dead? At least there is traction from investor to buy again Solana ETP. And whereas we saw some outflows on some short Bitcoin product that is available on the market, and also some basket Ethereum basket ETP. So yeah, it was mostly concentrated again on the two biggest blockchain, Bitcoin and Ethereum.
Very interesting. And again, like we're seeing the divergence between what we've seen on the spot market, where it was more Bitcoin led, and on the ETP side is more Ethereum led. Maybe staking is part of that as well, right?
Yeah, and also I think there was also kind of few outflows at the late last year on Ethereum. So most likely people are also getting back into it.
Yeah.
And it's a bit the same maybe stories on Solana. It was also very heavily impacted by the price action. But yeah, it's a very encouraging start of the year for crypto assets that still attract many clients.
Yeah, absolutely. Absolutely. So now I want to basically have a special interview with you, Alistair, so that we can talk about, what's an exchange traded product? What is the best analogy to the exchange traded product? Many investors see that product as a way to invest into stocks and bonds, but also now crypto assets. So tell us more about first, like what would be the best analogy to compare the ETP structure with anything that we are aware of?
So ETP means exchange traded product. Obviously, the best analogy is ETF. So exchange traded funds that are widely available in Europe to access any asset class, US equities or bonds. This is a proven track record of more than 20 years, ETF. The thing is that in Europe, ETP will cover ETF, ETN, and ETCs. And in Switzerland, and 21Shares is a Swiss ETF issuer, ETP issuers, you call ETN and ETCs actually ETPs. So it's a bit confusing sometimes for investors, but in the end, the structure is very like an ETF, meaning that there is creation and redemption. Investors can trade that on exchange. It's a listed securities with an ISIN. You can buy that through your bank or brokerage account. So it's very easily accessible for any investors as any stocks that you are used to.
Yeah, and you also mentioned ETCs, like exchange traded crypto or exchange traded currencies or commodities. Maybe you can give the analogy of what happened with gold and why we don't have basically like a UCITS funds for some crypto assets.
For sure, yeah. So in Europe, there is a regulation called UCITS that actually is over putting the framework around any collective investment scheme that is issued in Europe. And one of the UCITS rule is a diversification rule, usually referred as 40, 10, and 5. And this means that you don't have the right to invest in a single asset, or you don't have even the right to invest more than 10% in one single securities. And therefore, when you launch an ETP on a single coin or a single commodities, it can't be an ETF because it do not match the diversification rule. And for instance, you have gold ETCs, which is very similar to the structure of 21Shares ETPs that have been running for more than 10 years now in Europe. And so it's a very proven structure that was available for commodities before, that is now used also for cryptocurrency.
Very interesting. So right now it's not possible to have a UCITS funds for crypto assets.
No, yeah, unfortunately not. At this stage, it's not possible. But obviously that's something that I think people are looking into the market. But we will need, way more diversification to have this.
Sounds good. So you've seen what happened with FTX back in November, but also we've seen similar cases in the past in 2011 with, for example, Mongox, where they lost, a substantial amount of Bitcoins where they were not able to make the customers whole. And even like today, the customers or the ex-customers of Mongox are still waiting for payment, right? So there is a deadline until I think like early summer. But I think like here, what we want to really discuss about is the primary market and the secondary market, as you can see here in front of you guys, for the ETP transaction workflow. Because when one exchange goes down, or for example, let's say we have an outage because there is too much demand on an exchange, what does it mean for the ETP as well?
Sure. No, it's a very good question, and I think that's one of the biggest benefit of an ETP is that actually you have a diversification, and it's very important to understand that investor will buy the ETP on the regulated market first of all, or over the counter for institutional client, potentially with a counterparty which is a market maker, and will usually be regulated.
So we're basically here on the left
On the
for the secondary market here. So you guys are on the top left, and you're able to interact directly with your brokerage account or basically an OTC venue.
Exactly. So being the fact that the market maker will quote the ETP on exchange, the market maker on his side, he has multiple access to multiple exchange. For instance, they will have access to Binance, Kraken, Coinbase, a lot of different exchanges to source the liquidity. And that's very important to understand, is that therefore an investor into an ETP will usually rely, therefore, for the liquidity on several market makers. And those several market makers will source the liquidity on different sources. And that's very important because meaning that in the example that you were taking, if one exchange go down, they actually can source the liquidity on other exchange, or if there is an outage, they can still do the same. So it's really a diversification here that gives some good confidence for investors that they will be able to trade in and out, even during stress market conditions. And one good example, for instance, was during FTX. During the FTX debacles, the market was very crazy, obviously very volatile. But for instance, 21Share ETP had an uptime, so meaning that you could buy and sell during the exchange trading hours of 92%. 92% of the time you had a bid and a ask quote for 21Share ETP, which is a very strong stats again, because you have also some rules for volatility auction that will stop for 1 or 2 minutes the trading.
So now we just break down the secondary market, which is more consumer facing, investor facing. So what about the primary market, especially on the back end side of things? Because we just mentioned that you cannot interact with FTX because the exchange stopped the withdrawals or the exchange had an outage. But what happens to the coins if you're interacting with an ETP structure?
No, a very good question again. So again, basically here, any investor that is going to trade the ETP or is holding the ETP, there will be a role, and that's very specific to ETF and therefore ETP as well, is the primary market. The primary market is only accessible, and that's on the right of the graphic here. It's only accessible to authorized participants, and authorized participants are able to create and redeem ETP shares to match the demand on the secondary market.
From 21Shares.
From 21Shares. Yeah. So the AP role will be to source the liquidity, to source the coin on exchange or even OTC, and deliver the coins directly to the cold storage of 21Share custodian. So you can see that on the bottom here. And once 21Share received the coin on the cold storage custodian, then the ETP shares will be issued to the market maker or / authorized participant in that case, and with that will cover the on exchange orders. So the coins are safe because again they are usually going from one cold storage to another. Sometime and the market maker will just buy the coin straight away on the exchange, but that will be transferred very quickly, and therefore there is no risk. And also from a client perspective, because it's the market maker that take that risk, it's not the client.
Yeah, absolutely. And also the key difference here that we've seen, especially with the situation of FTX, was the fact that the customers' funds were commingled with the hedge funds of FTX called Alameda. We've seen that as well in other cases in the past with other exchanges like Quadriga that actually collapsed in 2017. But in the case of an ETP, so an exchange-traded fund or exchange-traded product, this is not the case because, as you know, we always repeat, like the accounts or the investors' accounts are segregated from the company's account, right?
No, exactly. Yeah. So ETPs are issued by what we call an SPV, a special purpose vehicle, and the special purpose vehicle in our case is 21Share AG. The 21Share AG is only responsible for issuing ETP, and there is a contract between the 21Share AG and custodian. And custodian that 21Share onboarded, we have 2 custodian, Coinbase and Copper. Again, very important to understand that it's the custodian of those companies and not the exchange. We'll have, therefore, we have a collateral account with them. It's pledged to 21Share. So even it's bankruptcy remote. from the custodian and for us. We have access to 21Share. We can check the balance on each ETP continuously. So we have active monitoring on top of the fact that we do due diligence regarding our custodians. So that's also very important. So the funds are not commingled. It's completely segregated and bankruptcy remote.
Yeah, absolutely. And that's very important here. And again, you know, when you look at the transaction workflow, not everyone can be an authorized participant, right? Exactly.
No, it's very selective to be authorized participant. So authorized participants are usually financial intermediaries that are regulated by regulators in Europe, like the FCA, for instance. And they obviously have very strict rules on their side, and they are very cautious. And it's also their work to really making sure that the market is working efficiently. So again, it's regulated entities, and that's also very important.
So now back to the secondary market. For example, let's say we want together to buy 1,000 shares of our Bitcoin ETP, and that 1,000 share represents, let's say, 10 Bitcoins in cold storage. We're going to have 10 Bitcoin in cold storage as well. That is the equivalent of the number of shares that we have.
Exactly. So the good thing with, again, an ETP is that given the fact that market makers need to price it, there is transparency around it. So we issue on a daily basis what we call a PCF, portfolio composition file, giving each coin entitlement to each ETP shares. And therefore, each creation is backed by one-to-one with the same coin entitlement. So we are 100% physically backed every time on a daily basis. And that's also very important.
Yeah, so basically like the PCF, if we want to give like a crypto native analogy, would be basically like the full list of the coin entitlement of like the 21Shares blockchain.
Exactly.
To some extent.
Yeah, it's really transparency, and it allows the market to work efficiently again, because there is several market makers in the order book, and they will be able to arbitrage themselves if they think someone is pricing wrongly the ETP, and therefore there is a natural arbitrage here that leads investor to trade at fair value and that trade at the underlying price.
And when we look at the end consumers here, so the investors that want to, let's say, for example, buy directly on screen, sometimes the liquidity is not reflective of the liquidity depth. Can you tell us more about this key difference here? Because many investors are looking at the liquidity on screen, but again, it's not reflective of how much they can buy of specific assets.
No, exactly. So very often what we say is that the order book liquidity is the tip of the iceberg. Most of the trade in Europe for ETF and ETPs actually happen OTC. OTC is very easy to use for an RFQ platform, are very easy to use. In one click, most of the institutional investor will get an instant pricing, which can be very often even more tighter than the central order book. The reason being is that as the market is moving a lot, some market makers can be reluctant to put large size in the order book because they could arb each other. So again, usually you can trade way more than the trading volume or the order book, because an ETP is actually only a wrapper of the underlying. So the actual liquidity is the liquidity of the underlying. And for instance, you were mentioning, I think Bitcoin traded 30 billion. So if Bitcoin trades 30 billion, it means that even in an ETP, you could trade almost 1 billion, because you have to take into account the fact that you don't want to move the market, but you could trade 1 billion into an ETP physically backed with the right market makers.
I mean, especially over the past, 7 to 14 days, we've seen time-weighted average buy orders of Bitcoin from OTC desks, where you could see basically blocks of the same transaction all the time, which shows that some investors prefer to divvy up a large transaction into multiple chunks, right? And it's possible as well to do that if people want to buy via an ETP structure.
Exactly. Most of the trade in that for large trade will happen either TWAP or VWAP. Will depend on exactly what the outcome for the investor is looking for. But yes, you usually try to avoid market impact when you execute large size. That's also something investor may want to consider for large size, is to use also limit orders, split the trade in several clips. That's usually a very good market practice.
Yeah, absolutely. Is there anything else you want to add to the ETP structure, the transaction flow, that many investors have some misconceptions about?
I think again, like it might be just a name that could be confusing, but it's very important to understand that an ETP before being launched goes through a lot of regulatory scrutiny. So 21Share is issuing a prospectus. The prospectus for each ETP is going into a lot of details, all the risk, very transparent. We also are liaising with stock exchange regulated market like Euronext Paris, Deutsche Börse, the Swiss SIX exchange. So we go through all those regulatory burdens, but makes at least the product very safe from an investor perspective, regardless of the performance, but in terms of assets, transparent, also in terms of fees. Fees are displayed straight away. So that's very important for investor. I would say those are very key items for investor to understand.
And, crypto is a 24/7 market. And of course, our exchange traded products or the exchange traded product structure is not a 24/7 market, right? There is a market open and a market close. So how the capital market team deals with the weekends?
So it's something we have to monitor because obviously if there was large price movement during the weekend, at the opening auction on the Monday morning, it can take some time to open. This is a mechanism to protect investors because you could assume that for asset class that are a bit less volatile, something that would have dropped 20%, the exchange prefer to double check that it's actually moving from 20%. So obviously when there is a large market movement during the weekend, exchange might be in touch with capital market before and just checking that, the value of our ETP went up or down by this amount. So that's something, and again, it's for protection of the investor here to avoid trading at a misprice.
Yeah, absolutely. And how about, if investors wants to buy over the weekend, is it possible with an ETP structure?
I would say some institutional investor might be able to do it. For retail investor, might be a bit complex because again, they would be trading on exchange. So generally speaking, the answer is no. Though again, in some condition very specific, you may be able to get a trade. But there is also something is that markets are not settling on Saturday and Sunday, so you will not get your shares. You can have a price potentially, but not your shares. You will not be owner of the shares.
Yeah. Can you tell us more about what you would foresee going forward in terms of single assets or baskets where they could see more inflows if you have to have an aggregate value or an aggregate view, I would say, of the markets?
I think the market is evolving a bit. A lot of single coin have been launched in the recent years. I think some regulators and exchange are also working to have a kind of regulatory framework for basket and index a bit broader. This could give exactly what the usual ETF were done for, meaning passive tracking on the asset class. I believe that's something we could expect this year to happen, is a kind of new regulatory framework to have more large basket and basically allowing investors therefore to assess the broader universe of the crypto assets.
Yeah, this is awesome. Well, thanks, Alistair. I think we have a few questions, a couple of questions. Are we getting the presentation afterwards? Absolutely. And you're welcome for the update. Very, very happy to have you here. You're going to receive it by email. We have another question, and this is a question about one of our products. Is it possible to have the Solana product and earn additional yield through baking rewards by validating transactions, so basically staking? You want to get it?
Sure, but at this stage, and Eli will give you more update, but we need the Ethereum to staking to be liquid. This is the reason that why ETP are also working well is because the underlying is liquid and they are not right now with Ethereum. If you stake Ethereum, they are locked. If 21Share was staking the ETH on our AETH product, what will happen is that therefore the underlying on our side will not be liquid and we will not be able to face redemption. We want the ETP to track one per one the underlying, and therefore we will not be staking at this stage. But when there is an update, maybe...
yeah, absolutely. No, we have, as Alistair mentioned, we have liquidity requirements, and we want to make sure that it's possible to redeem and create shares. And unfortunately, right now, the Ethereum blockchain locks the rewards onto its network, and there will be an upcoming upgrade called the Shanghai upgrade that would be happening by the end of Q1 this year. And it will allow a certain set of validators on the network to withdraw their Ethereum staked assets from the network to their own wallet address, or like if they want to sell onto the open market. So the withdrawals are going to be limited to 6 validators by the time each transaction happens on the blockchain. So of course, we're going to monitor how it's going to evolve over time, but liquidity would be very important, of course. So we have another question coming back to risk management. How many custodians do you use, and in which jurisdictions are these custodians registered? Are these BaFin regulated custodians? I hear that American custodians might be problematic as insolvency rules or different to Germany, for example.
Excellent question. So 21Share is using 2 custodians. We use Coinbase and we use Copper. Copper, we use the entity registered in Switzerland. Coinbase, a US company. Coinbase is listed on the Nasdaq stock exchange. It's a regulated company with a regulatory transparency requirement. We also have, again, a contract with a custodian that actually the ownership of the assets are 21Share. They just offer the service here. The ownership is with 21Share, and that's also very important. So I was saying, in the beginning, there is we are bankruptcy remote from that risk.
And also it's very important to note that the Coinbase Trust is very ring-fenced and different from Coinbase the exchange.
Definitely. So it's very 2 different entities here. We are not talking about Coinbase the exchange, but really Coinbase the custodian.
Perfect. We have another question as well. What ongoing due diligence do you do on the custodians to ensure that they don't mishandle the coins, backing investor shares through related party transactions like FTX did? So that's his question.
Yeah, amazing question. So we run a very strong due diligence, and 21Share is a crypto native company with a lot of experience into the crypto space. So we have been running due diligence with also knowing issues and how transaction on blockchain works. We are using blockchain analytics. We have access to obviously our wallet address, and therefore we can check on a continuous basis the balance of this wallet, and that's very important because therefore they can't move the asset, and we can see what's exactly going on our ETP and therefore on the wallet.
And that's the beauty of the transparency of the blockchain, that we can see on a 24/7 basis the flow of funds, the account balance. Not even we don't even need to actually connect our wallet to actually verify the transaction balance, which is actually even a better security measure because we don't need to connect to the internet to check a wallet address. And that's very fantastic because that provides additional security as to how, for example, a hacker could try to flip some coins away from the wallet. So that's an additional measure too.
And on top of that, because FTX is, let's say it's not yet a result, but it looks like a fraud. We are also, we have contract of insurance between custodian and 21Share regarding fraud, theft of employee mishandling something. So there is also an additional layer of security on top of the fact that we run due diligence and that we have access to the wallet, but there is the insurance on top of that.
And also in addition to that, we also have our research team that provides dashboards on exchanges' wallet addresses, whether it's like Binance, whether it's crypto.com. And these exchanges don't have to actually deal with us directly. They're not even custodians when I talk about Binance or crypto.com, but that's basically giving additional transparency to the industry. So check out on duneanalytics.com. We have a special 21Shares page that you're going to receive by email after this call with the presentation and of course the recording of this analyst call. Awesome. So we have another question. So we have so many questions. That's good. Very entertaining. So what will the process look like in terms of the custodians in the context of RNC? Does the custodian have the option to use or lend the coins?
So again, on that one, therefore, for the custodian and the wallet address that we have with our custodian, we have the balance. So no, they can't lend the coin from us. 21Share displays the lending policy of our ETP on the prospectus. I can give a quick overview of this prospectus. So we have the right to lend on some ETPs that are called Core Bitcoin and Core Ethereum. Those are the two new ETPs that have been launched this year with lower management fees. The rest of the range can't lend any coin, and that's very important. Also, there is important information regarding lending policy. It will be always over-collateralized with collateral like USDC or Ethereum or Bitcoin. And that's also very important. Again, every risk and everything that we are allowed to do is displayed in the prospectus documentation. And I think that's also very important for investors to understand, is that by offering those type of products, we have to comply with a number of transparency rules that are again written and validated by the prospectus regulation.
Yeah, absolutely. It's a very good point. And again, that really ties back to the transparency that an issuer needs to give by regulation.
Yeah.
And that's by the law that we need to provide that. Another question is, what is the advantage of investing in an ETP, so an exchange traded product, compared to directly on an exchange or directly to a wallet? Maybe you can give the example of FTX, actually.
Sure.
Compared to 21Shares.
For instance, yeah, exactly.
If you were to invest in Bitcoin on a 21Shares ETP compared to FTX.
So, for instance, if you were invested Bitcoin with FTX or with 21Share, there would be obviously massive difference. With 21Share, you will have indeed the market performance. Bitcoin price went down, but your assets were safe. Your assets you could trade in and out. You had like diversification of market makers and again of the liquidity, so they could source the liquidity from other exchange. When FTX went down, FTX was only representing 5% of where our market makers were sourcing the liquidity. So they still had access to 95% of the market. And that's what they did. And again, it worked very well. That in terms of biggest advantage, to be honest, I would be saying that for the protection to investor and security for centralized exchange. Against other issuers, I will say 21Shares is striving to institutional grade services. So from a custodian perspective, but also from a market maker perspective. And the market maker are in the graph, you can see they are the central piece to a ETP. And we, 21Share, have 5 market makers. 2 are contracted, meaning that they have the obligation to provide a price to our ETP to any client. And that's also very important. And it comes with a cost, obviously, but it's a very differentiated point with other issuers, for instance.
Absolutely. Agree. Couldn't agree more with you. And then last but certainly not least, we have an interesting question that ties back to our upcoming magazine, which is, what is the next trend in the crypto market? What was the place to be? So of course, at 21Shares, we don't provide this, right? But we have an upcoming report on the market trends across all these sectors and industries that basically compromise the crypto industry, from Ethereum competitors, so infrastructure players, from digital assets like, for example, Bitcoin, to the metaverse, NFTs, decentralized finance, real-world assets on the blockchain, and there is much more. I don't want to spoil the reading of the magazine, but stay tuned because it's going to come out sometime next week. One last question. Are there and what are market conditions in which the market makers will not allow the creation and redemptions of securities?
It's an excellent question. In cryptocurrency, it most likely will be in an event where the blockchain will be altered. That's something, for instance, we saw with Luna. As we transfer assets from cold storage, we do on-chain transaction. If the blockchain is altered, there could be kind of a delay for the creation and redemption. That being said, 21Shares developed a creation and redemption process to trade also with US dollar, meaning that if like the blockchain was altered, what we could do is take US dollar on our side, put that on exchange, and keep that until we can do the transaction on chain. So there is some certain market condition that where it could be impacted. That would be extreme market conditions. And in some other ETP or if we were discussing that, it could be also, for instance, there was a question on Ethereum and stake. If Ethereum was staked on our side, and we could not face redemption in that case. That could be an example of event. But again, as a firm, as a fiduciary duty, our goal is to ensure liquidity in our ETP, meaning that, again, people can create, redeem without any impact.
Yeah, so I would say, like, to be more even precise, it would be basically a technical glitch on the blockchain, or even the internet going down, and that's impossible, of course, to even connect with one another. Exactly. And also with the APs. And I think on the other side, there are over solutions when, for example, the internet goes down, but it's still possible to interact with the blockchain by using satellites. We've seen that with various blockchains trying to leverage the validators that are actually connected with satellites. So that's possible that we could see some of these, mitigation of risk like these. But again, I think like the core risk of the impossibility to create and redeem would be basically if like a blockchain goes down.
It's all come back to the underlying liquidity, again, as the underlying behavior. For instance, in other market, like when the Russia last year happened, Russia ETF in Europe were suspended because APs were not able to trade the Russian equities. The same will apply for crypto ETP with 21Shares. We can't access the underlying. Yep,
absolutely. And I think last but not least, I want to say thank you so much, Alistair, first of all, but also everybody here on this call for attending. We also have here our newsletter and research where you can basically subscribe to get our weekly newsletter, monthly reviews, quarterly magazines, and much more. So thank you so much for attending. We hope it was very helpful. And again, have a great and wonderful day.
Thank you, everyone. Thank you, Eli.
Thank you, everyone. Bye-bye.